Hey, it's Matt with PriceActionTradingSystem.com, and it is Monday. It's February 1st. This will be our chart lesson for the day, and January's in the books. We're starting another month, and this is a short month, so I assume this one will go by quick. I don't know where the time goes, but the volatility's still here, obviously, and I think it's probably going to remain for a little while. We just have a lot of uncertainty going on in our country, and I just think we're going to continue to see this volatility for a little bit longer. And really, what we had this big spike up during the overnight. We started going flat right into the open, dropped off a little bit, and then we started a second leg up from there. When that happens, you still want to, when you see this going higher here, you still want to respect this overnight highs. So you don't want to take any trades right into that. But once you're pretty confident we're going higher again, which it was pretty easy to see that, we didn't even get any real resistance there. We just went straight on up. So look for that measured move. Obviously measure the line over here, then move it up to where the low point was, and then that would be your measured move. We didn't quite get that. That was pretty aggressive to get another leg like that. I think that is up around 38. I can't remember exactly what that price level is there. Um, just to be safe, I'm reading that right. I think it was 38.10 or so. Yeah, it looks like it 38.11. So that would have been your target based on a measured move, but that one's rather aggressive. So it doesn't surprise me that we didn't get it, but it doesn't surprise me at all that we had another leg up, and you can see it there. And we may still hit that target before it's over, but this day is pretty much over with. It's 2:45 now, so market's going to close here shortly. Let's back out. We'll go through the trades. There's a few of them today. And most of this price action, I would say until about just a little after 10 o'clock, was sideways. This is just kind of sideways. And notice how I measured this. When we drop down, I'd look for a measured move down that way. And you can see we went a little bit further than that, but that pretty much was a good target. And then we were going higher from there. So I played it as a range, and notice here we kind of got back inside the range, fell out again, and then it was all uphill from there. So that's kind of how I saw the day. Again, you can see the bigger picture if I back out here. And you got your two. It's just basically a two-legged move up. And that's pretty common. Notice how smooth and straight this leg was. And then the next leg is a lot more chopping around. There's actually a channel up, a correction, a short term. This is like a spike in another channel here. And so there's a couple of different channels going on. There could be a bigger pattern here, but this was the way you really needed to trade this to see what was to find your trade. So, in the bigger picture, this is probably a spike up and then a channel. And so there's probably another channel in here. Maybe I didn't even look for it. You don't really need it. Maybe something like this. And that looks pretty doggone accurate. So it's probably pretty close. Maybe that's not quite that high. And that's something like that probably. But anyway, you don't need that. You need to narrow down into the smaller stuff anyway. So let's back out. We'll go through the trades and try to wrap this day up. I'm going to back on out here so it's a little easier to see. But you can see the overnight channel, the blue one. We had a break, a couple of legs up to a new high. Then we're just kind of going sideways here. 7 o'clock came just as we're kind of making this move down right here. And you get a first entry long and you get a second entry that fails here. But that's a little bit congested. But when it pushed down and pulled back, and that was the first break of this channel, I think it was pretty safe to enter there. Notice there's a triple. Really, we tested that midline once, twice, three times. It's actually four times there. And there's definitely a triple test. And so 3 attempts to go higher. 3 attempts on that EMA. There's still room down to the lows here, and we may be reversing. So I like going short there, and you might take this trade. I just think that's a little congestive, and it did break higher and turn down, but it doesn't leave you. I mean, you're basically going short at the bottom of that little double. There's a little double bottom there, and you're going short right into that. So I think you were better off to wait and just see what happens, and then you get this set up, and it's 3 times to try to go higher. We're probably going to go lower here. There's another lower high here again, but again, you got to go short right into the double bottom with the last low right there, and you can see that's exactly where we bounced, kind of what you would expect. So I think this was the only real logical trade there that I think was safe. You might argue for this one to be green, but I would wait. But when you get this nice bearish bar on a 3rd attempt to go higher there, I think you're good to go short there. I wouldn't buy anything down here as far as a bounce without a higher low. You don't get it. You're running up. You do get a higher low here, but it's too late. And we're just kind of chopping around. And then you get a double test of these highs up here. And you get a second entry short right here. Again, when you're trading a range, a second entry is not that big a deal. You're not really looking for second entries. But if you get one, if you get a setup and it turns out to be a second entry, you can clearly see 2 legs back up to this high. I like going short there. Again, you probably should wait on a lower high, so that's why I marked that one green. If you took that trade, it's right there at the borderline. I still think it's a little bit aggressive because it could push up one more time. And that happens. That's not unusual. People send me their trades all the time with a setup like this, and it fails, and they thought, I thought I had a sure thing, and it failed. Why? Well, you really need a little bit more information that we're going lower, because we're still, I mean, we're making higher highs and higher lows here, and we could come down and we could tick lower and turn up and push up one more time, or even keep going higher for that matter. So really, when you wait on a lower high, you get a little more information that, hey, prices are probably going lower. Here, your lower high doesn't come to way down here, and that's too late. But then you get a failed second entry long. This breaks higher, and it turns down right there. Normally, I'd say you probably wouldn't want to enter it this in the middle of the range here, but with that trap there, with it breaking higher and turning down, I like going short there. And you're only looking for prices to probably come back to the low, but in this case, it just keeps on going. And when that happens, find your measured move and look for a target down near here. And you can see we went a little bit further. We come back. You've also got this channel. We got to overshoot, but this is the first break. So notice this small channel working up. You get a close outside a new high, and this actually broke higher and turned and went down. If it goes out the other side, go with it. You can't wait till this bar closes and try to go short way down here. It's way too late. But if you saw the engulfing bar and that is a second entry short. Notice this low. You get a first entry and then you turn higher. So you get a first entry short, but it goes higher and comes back. So your second entry is almost at the same exact spot. The first entry was when it broke lower here. The second entry would be, but your second entry all occurred in one bar there pretty much. So it's a little different, but it is a second entry short. And again, I just wouldn't wait till way down here to go short. It comes back and gives you a lower high. Well, definitely take that trade. It's a quick, easy scalp, but it bounces. And there's actually a failure here, but by that time it's obvious we're kind of going sideways, and you don't want to go short right down here into that low, because this is what happens. And then you fail out the top, and if you'd got a lower high right here, I would have said trade it. And you might trade that anyway, but you would expect this breakout to come back. You're expecting prices to really give you a measured move here. And so it's a little bit risky. Even though you got a measured move, it's a little bit risky going short. If it was right off of this previous support that acted as resistance, I'd tell you for sure probably take that trade, because you treat it like a failed break out of this little congestion area or this little range. But you still might take that trade. It's just a little bit aggressive. I'd want to wait on something a little more concrete with a lower high, and you just don't get that. We're all the way back down here bouncing again. you actually get a higher low right here. I marked it. Um, Notice how we bounced, we come back. As long as you got enough room, the key is do you have enough room to kind of get out here. And if you did, you may take that trade. This one's close to being green too. But the reason I like this one is not the range. I drew that trend line and it's bouncing off that trend line. So that leads me to believe we're probably going to go higher. We've tried to go lower once, twice, 3 times, and then you got a higher low on top of that. We may be going to go higher here, especially with it bouncing off that trend line. So that's the reason I marked that one. The key is just make sure you got enough room to get out. It pulls back, gives you a failure here, but I wouldn't take that because we're back in the range. Just wait. And then it comes back here and bounces off the trend line yet again. And notice there's 2 legs back there. It does make a little higher low, but that's still a 2-legged correction back to the key entry point, the main trend line. Nice. It is an inside signal bar, but it's a very nice signal bar. So you may take that trade. Again, it's a little aggressive, but I like that one. I like it much better than the failed second entry short right over here. Now you got a little more information that, hey, we're probably going to, this trend line's definitely in play. We're probably going higher. And you can see the midline coming into play there and the other side. And this is like a little spiking channel. I don't see any reason to enter way up here. You do get a second entry pullback right here. I didn't mark this one, but it probably should at least be green. The problem is you're right into these highs. If the channel's in play, you got plenty of room up here, but you really want to have more room to these highs, especially when you got several ticks on this bar. It's a really big bar, so it's a little bit risky if you're wrong. You know, it's an 18 tick bar, so I mean, I'll mark it green because it does fit our criteria, but I just think you're better off to skip it. And I don't see any reason to be looking for any shorts yet. This is a pretty good trend going up. That one's tempting, but it looks a little congestive too. You still got a little room back to the EMA. Lower high here, but right into the midline, right into the EMA. Not a very good signal bar. Failure here, but now you're back down to the support of the original channel. You don't want to be going short there. And you see it fails quickly and bounces right off of this trend line. You'd be better off to wait and go short. And so I like go long, wait and go long. And I like going long there. It's also a triple test. We made that low. We test it once. We test it twice. It's right off the key entry point. A lot of reasons to like that trade. Nice signal bar, and then it takes on off. Then you get another failure up here. Notice you made that high. You test it once. You test it twice. And this is why I mark this one green. You've already tested it twice, and if you went short, it fails. And this is an uptrend, but it is in the middle of this channel here, and it seems to be some strong resistance. But so when it breaks higher again first and then fails and comes back down, we're probably coming back to the EMA at a minimum. So you might enter that on this engulfing bar. It breaks higher and turns down. You might go short 1 tick below that just to try to get a scalp out of it. The fact that we tried once, twice, 3 times and couldn't get back up here, it's telling you that you're losing some momentum. You're a bit away from the EMA. So if you see all that, maybe you take that being a little aggressive, but I think it's too aggressive. Of course, we run down and you get a close outside here, a new low. We try to go lower again and make a higher low. This actually breaks lower, turns up. Just ride it back. You're just looking to ride it back to the EMA, maybe ride it back up here and test this support area. And lo and behold, if you catch this one, you catch this next leg up and it's off to the races. And you'd get an easy runner here. So off it goes. You could actually look at this as a failure. This is close enough to being a double bottom, so first entry, second entry, but it's not back to the EMA. It's very congestive. I'd just leave it alone. And unfortunately, you don't get a chance to enter this move all the way up. We do come back to the trend line here. So you might look at it like we're making, it's right off the key entry point. But again, it's congestive looking. You don't have much room to the highs. I just think you're better off to skip it. Then, of course, you finally get a break outside. You get a first entry, and you get a second entry long here. But the fact that you're under the EMA, the bar is very neutral. Just wait and see if you get a higher low, which you do here, and you get a nice bullish bar. If you didn't enter there, when it comes back here and makes a failure and turns back up, definitely enter there. But if you already entered here, I wouldn't enter here because you would really expect it to take on off. But if you weren't in here and when it breaks lower and fails and turns up, if it breaks above here, you're probably going to get another move up to the highs. So I like entering either one of those spots, really. And we just kind of go sideways. We work our way back to the trend line. This is supposed to be, actually, no, I do have it in the right place. I wanted to explain this one. Notice you're working down, you get a break outside a new low, but your signal bar is not very good there. And even though you don't make a lower low here, you do make a lower high, so that's a correction. So you could treat that like a higher low. It's a little bit congestive, but if you see that trend, that key entry point, that trend line, you know why. We're kind of stuck between the EMA and this trend line. And if this trend line is valid, we're probably going to go higher. So you may take that trade. It's aggressive. That's the reason I marked it green. It's a little different, but I marked it green. We run on up. We just go sideways. I don't think you want to go short here. Even though it's a failed breakout, I'd want something lower than that because you're making higher highs and higher lows, and it could just keep going. So I don't see anything here that I like. This would be a second entry long, a higher low, but there's just not much room in there. If you've got enough room in there, you might take that one. But that would be the key, and I just don't think you got enough room there, and I don't see anything else here I like. So you finally get a break. You get a higher low here and a second entry long, but not a good signal bar. Then you come back and you get another higher low here. And really the reason I marked this is really your signal bar. But the way I played this is a new low. So you get a first entry, then you get a second leg up, and you get a second entry. So that's a clear 2 legs up. And when it breaks higher here, it's a failed second entry short. And it does gap over and it goes really quick. So you may not could have got in that, but hey, it was worth dropping a limit order there to see if you could. And I did like that trade. We're just getting too far away from the EMA up here, and that takes us into 2 o'clock. So, but yeah, if you could catch that trade, it'd probably be worth trying to get in it. And again, it's just a failed second entry short. You can clearly see 2 legs up there. There's actually a trend line there too. Little trend channel working up. Maybe this is a little lower, like right in there. That looks like it to me right there. But there's you another little channel working up. I'll color that one just to make it a little different. Make it easier for y'all to study the chart. But yeah, you can clearly see those 2 legs up that fail. You got enough room there to get a scalp almost before you get to the high. So I like that one if you see that for what it is. And that's really what I saw today. So not a lot of trades today, but there were a few good ones. This was the trade of the day. If you caught this, you could ride this all the way, even if you only rode it back to here. I mean, that's probably 20 points almost. You catch a runner like that, that's all you need on the day. And if you played it right by just, once you got up here close, start moving your stop 1 tick below your signal bar, you could have traded it a little bit higher, most likely up into here. So there's a lot of different ways you can manage your runners, and that's why I don't teach a whole lot about how to exit your runners, because a lot of that is personality driven. I'm pretty good at finding the entries, and I can't stand to watch prices take up. I back up and take my profits back again. So I just like to exit. I'll pick a like if I know there's a strong resistance here, I'll probably exit just prior to that, and I'll take what that'll give me all the way up there. And then I'll look for a new entry. But some people are not as good at entering, and they're and holding on to those kind of trades doesn't bother them so much. If you're good at that, try to get these runners and get the most out of them, because one runner can, if you get one good runner, even if you only got a runner from down here to right in here, even if you were only able to manage that out of it, I mean, think about it. With one contract, if you got 20 points, that's 20 scalps. That changes your numbers significantly. So if you can get those runners occasionally, they're worth getting. Even if you're only getting 3 to 5 points out of them, that's 3 to 5 scalps for if you're just trading singles. So it really changes things. If you're trading multiple contracts, it doubles or triples or quadruples or however many you're trading. So keep that in mind. Don't be afraid, understand that runners really change your math. There are people that do this in scalp only and do well, but you got to be pretty good at it if you're not getting runners. And again, you don't have to get a lot of runners. So if it's not a trend day or prices aren't trending really well, the one time I really like to catch runners is on strong trend days and on these breakouts like this that fail, because often these failed breakouts are key lows or highs for the day. And you can hopefully it's not, I don't have to explain to you that that's an important low for the day. We broke back out of that range, made that new low, and then it was all uphill from there. And that's what you'll see a lot of times on these failed breakouts. They turn out to be important lows. And that's that's an easy one to see and look at it go. And that's an easy one to get a runner on and hold on to. So that's why I like to trade these. Sometimes I get a little aggressive. If you're going to be in an aggressive trade, that's the kind of place to trade one, because you want to catch these, and that's what sometimes you only catch them if you're aggressive. Now, that doesn't mean I'm telling you to trade aggressive, so don't take that the wrong way. I know a lot of times people hang on every word I say, and they sometimes don't take into account. I'm not telling you to go trade aggressive. I'm just saying watch these and learn from them. And learn to spot them, because they do turn out to be important places that you can really get a huge runner on. And those runners really change your math. So anyway, I'm not going to beat around the bush for over 20 minutes. I like to keep these things at 15 or 20 minutes. It's hard lately with all the price action and volatility, but that's my hope, is to keep them under 15. And not just because I want to keep them that short for you guys, but it's for me too, because I spend 20 minutes, just for 20 to 30 minutes recording this thing, and then I've got to process the recording and upload it. So it's an hour to an hour and a half's work for me every day. So for my own benefit, it's helpful to keep them reasonably short to fit. I want to get everything in there, but I want to try to keep them to 15 or 20 minutes. So that's the idea behind that, not just because I think you guys only want to see 15 minutes, because people always email and say, don't worry about the length. And so it's not just for you guys, it's for me too. So just for full honesty there, it's to help me too, because my time is I'm so short of time. I just don't have enough time to do everything in the day every day. And so I'm searching for ways to find more time to devote to this without affecting my own trading, my own personal life, and my own free time as well. So, but anyway, hopefully that makes sense to you. I'm going to wrap it up. We'll be back again to do it tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.